Welcome to BizShift, the show where we talk to global business leaders about the trends and transformations reshaping their industries. From AI to the transition to a low-carbon economy, we dive into the structural shifts changing how businesses operate. Today, I'm joined by Wael Sawan, CEO of Shell. With operations in more than 70 countries, Shell is one of the world's largest energy companies. Wael's 27 years in the energy industry give him a unique perspective on balancing innovation with today's energy demands. Wael, welcome to BizShift.
Thank you. Good to be here.
Let's start with the basics. What is Shell?
One of the largest energy companies in the world. We connect energy sources to people, to businesses, and we make that happen through some of our production activities, extraction activities, all the way through transporting liquids like oil, like diesel, like gasoline, jet fuel, gases, all the way to our customers who either use it for transportation typically or for industrial use. And we do that across multiple countries and have had the privilege to do that for 117 years now.
So you've spent most of your career at Shell. Tell us about you. How'd you get interested in Shell in the first place?
I fumbled my way into the company. I was studying in France and had planned to go back to the Middle East where I had studied and wanted to sort of develop my career. I studied engineering. I come from the Middle East. I was born in Lebanon and sort of spent most of my formative years in the United Arab Emirates. I was given an opportunity to come in for an interview, so I thought I would test it out more to hone my interviewing skills. One thing led to the other. I said I'll do 1 year after they offered me the job, and 27 years on, I feel incredibly privileged to be sitting in this chair.
What was the path along the way of how you built your career?
I started as an engineer, what we call offshore, but really was in the desert of Oman on a rotation for a few years. And evolved my career from what was predominantly call it a technical operational upstream role into eventually more of a techno-commercial role where I worked on markets like the Libyan market at the time that was starting to open up, the Iraqi market and others. I stepped out to do my MBA for a couple of years with a short internship at Goldman before coming back into Shell. And then my career sort of took a turn into gas and power at the time. And then from there into downstream, into mobility, our marketing business. So I got the opportunity to see most of Shell before stepping into leadership roles, which firstly took me into Qatar, running the operation in Qatar for us there. Then to run our global deep water business, then our upstream global business sitting on the executive committee, and then into our integrated gas and renewables business on the executive committee before taking up this role 2 years ago.
So you've touched almost every part of Shell today.
I've been lucky to do so.
You were asked about 2 years ago to become CEO. What was the problem statement that you framed as you stepped into that job? What was the situation?
This is a company that has an incredible set of legacy positions, outstanding capability, leading franchise businesses, but that had not been delivering to its full potential. Our job was to be able to turn it around, to deliver to its full potential quickly, and to position it to be the company that it deserves to be for the coming 100 years. We are blessed to have had decades of great businesses, and I didn't sense we were as hungry as we needed to be to establish the most competitive businesses. In isolation, we needed to be the best we could be, and as a whole, we needed to be even better than that, to essentially create a total that is greater than the sum of the parts. And we had pockets where we were doing that, but it wasn't as widespread across the organization as I believe this company can be. And there is a big delta there, which we are just going after at the moment.
So, having framed that problem, what is your strategy in a few words?
Trying to do three things. Number one, grow our LNG business to be the world-leading business that it can be. Number two, to sustain our liquids production at lower and lower carbon. And number three, to transform our customer-facing businesses towards lower carbon solutions. That's at the heart of what we're trying to do as a company. And in each of those, we are playing what I believe is a leadership role in the energy transition. And put together, I think it positions us as the investment case for the energy transition.
So let's unpack those three parts. Let's start off with gas.
Gas, and particularly LNG, is going to be a foundational fuel for the future. It'll play a role to decarbonize or to displace coal, and it's going to be a critical fuel to be able to provide the balancing for the intermittency that the renewables space will bring, the renewables assets of the world will bring. It's important to also recognize gas is not just for power. One of the biggest opportunities for gas is in the industrial space, fertilizers and cement and aluminum and the like. But where we particularly play an important role is in LNG. So in essence, taking gas from those who have too much of it to those who need it. Sometimes because their demand is growing, sometimes because even though their demand is flat, their own domestic gas production on which that demand was built is declining. Take Southeast Asia as a good example. And so rather than having to fundamentally turn over their entire capital stock for their economy, by importing LNG, they are able to use that as an energy source.
You're framing gas as helping to decarbonize, but gas is a carbon-intensive substance. So how do we think about that?
Yeah, great question. I think firstly to recognize of all the fossil fuels, gas is the cleanest. Simply by shifting from coal to gas-fired power, you're reducing emissions by 50% today. And you're doing it in an affordable and economic way over the life cycle of that investment. And importantly, when you build infrastructure for LNG, there is a pathway to take it to net zero. And that pathway is the LNG, the carbon molecules you have today. Over time, we will decarbonize that. And what do I mean by that? In Canada, for example, our project there, we're using hydropower for parts of our demand. Or in Qatar, we're using carbon capture and sequestration. And in the late 2030s, 2040s, there's a pathway to defossilize that using what's known as liquid synthetic gas, essentially taking power, green energy combined with CO2. So today, it's already contributing to a significant reduction in emissions, and over time, it can take us to zero emissions.
You also produce oil. How do you look at oil in the future for Shell?
We believe and see at the moment that as energy demand grows, the demand for oil will continue to grow at least through this decade. And at some point, we'll plateau. And then it'll be a gentle decline after that. Who knows exactly when? Likely in the 2030s. Different people have different views. Where we see a differentiation for ourselves to play in oil is where we have what I would call basin mastery, where we really understand the geology of that basin, of the subsurface that we're operating in, such as the US Gulf of Mexico, Brazil, our assets in Oman, Malaysia, and so on and so forth. We have some real differentiated capabilities in areas like deep water, And we have legacy assets that allow us to continue to produce oil. Some of the key elements we think about, though, is whether we are at the lowest end of the break-even price to be able to produce that oil so that we are in the money through the cycle. And secondly, the carbon footprint of that oil as we look to continue to deliver liquids production, oil production, but at lower carbon intensity over time.
Give an example of reducing the carbon intensity of oil. It almost seems like a contradiction in terms.
Firstly, where you produce the oil, the nature of the reservoir matters. So, for example, the Gulf of Mexico it's very prolific in the production of oil, and you don't need a lot of facilities. That means the carbon intensity of that oil, when you compare it to, say, oil sands in Canada, the Gulf of Mexico is significantly advantaged. Right? To give you a sense of numbers, and forget the quantums at the highest level, but typically we deem 0.14 tons of CO2 per ton of produced hydrocarbons as being very good. Gulf of Mexico is closer to 0.04. And so that's a quarter of very, very good. Right? And so choosing what resource you produce is important. After you've chosen what resource you're going to produce, you still have a lot of levers to be able to optimize that. So, for example, your ability to keep the facility running well means that you're not starting and stopping and potentially creating emissions. Your ability to be able to capture gas if there's any gas being produced from the facility, so you're not flaring it or allowing methane to go into the atmosphere, is a critical part of responsible stewardship of that resource. And so on and so forth. There's optimization opportunities. There's opportunities, for example, to use renewable power to drive the power needs of your facility instead of burning fossil fuels. And so all of that together creates opportunities to continue to reduce the carbon intensity of the crude that you are producing.
You've driven a shift in Shell's strategy on renewables. Talk about your view on renewables as a sector and Shell's role.
I'd start off by saying I fundamentally believe companies like ours are very well positioned to be able to support the energy transition and drive towards a lower carbon future. And we need to play to our competitive strengths. And what I've tried to do in the last couple of years is to really look at the options where we have been able to demonstrate that we are truly advantaged and where shareholder capital can be stewarded in a way that delivers the expected returns, while in areas where we do not have competitive advantage, such as in renewable generation, we do not need to put significant capital there. And so how we think about, if I may just expand it to low carbons in general rather than just a renewable space, what we think about is in the, call it the power space, our biggest strength is the adjacency with gas and the adjacency with our world-leading energy trading business. And so there it's about how do we actually get access to electrons to create value through that value chain with double-digit returns. Whereas in something like carbon capture and sequestration, our competitive advantage is different. It's our knowledge of the subsurface. Sometimes actually it's our ability to own the pore space in the subsurface and our ability to stitch together a value chain. That is our advantage. And then if I add one more dimension, you can look at biofuels as an example, where our strength in the marketing towards our customers means that as mandates kick in, regulatory requirements, for example, in Europe kick in, those require blending of lower carbon products with more conventional products. And so what we are able to do, given we are the biggest seller of energy to customers here in Europe, is to then source or produce low carbon products through the arteries of Shell to deliver them to the customer in a way that still delivers returns to our customers. And so what I would say is we are really positioning on where we think we can truly win and truly deliver returns, and calling it when we realize that we don't have a winning hand.
How did you help the organization see where you have a winning hand versus where you don't?
I think there's two things we've tried to do. Firstly, we had to be incredibly honest about where things are. We have an incredible cadre of people, very capable. But that doesn't mean we need to keep fighting the forces of gravity. And so we need to be able to learn, fail, and move forward. And so the biggest thing we've tried to do is to just put a spotlight on how we have been performing on a competitive benchmark basis against others, understand what more we could be doing to maybe improve, but then to realize at some point this is not our game, and simply matching others is not good enough. We need to be able to create an alpha over and above what others are doing. I'd say two, creating much more clarity of what is it that we are trying to do all this in pursuit of. There are many people who have a role to play in the energy transition. We cannot privatize the problem that the world really is facing at the moment. But what we can do is to have a very positive contribution in moving the needle. And we will do that when we can demonstrate that we are able to develop profitable and scalable business models that will attract capital towards them. And so what we've tried to do is we fundamentally shifted almost the majority of the targets. We had some 70 to 75 targets, Mark, when I first came in, on what volume of CCS we wanted, what volume of nature-based solutions. We've simplified that. Now we have 4 financial targets, 4 ambitions and targets on the carbon side. We have a strapline of more value with less emissions, and we've said if you are not contributing to that, then there is something that needs to change.
Where are you in your transformation journey at Shell?
Say we're early on that journey. We set ourselves a period of 10 quarters, the summer of 2023. We called it our first sprint, and we set a number of goals that we wanted to meet, and I'm pleased to say we are meeting and beating those goals. In my mind, the best version of Shell is a much more focused version of Shell. And we want to build resilience, because this is not about simply what we do for the next 1 or 2 years. This is a recognition that this will continue to be a cyclical business, and that it is easy to make money at the top of the cycle. Long-term value creation happens through the cycle, and therefore we need to be ready to be able to play across those commodity cycles. And so this is a journey of years.
I'm going to ask you to step out of your chair as CEO and actually just think as an observer of the energy landscape in Europe. What do you think European governments and society need to do, both to prosecute decarbonization, but also ensure reliable, low-cost energy?
I'd say a lot is going well in terms of driving a decarbonization agenda. That's simply because Europe's best options right now are things like wind when you go to Northwest Europe and solar when you go to Southern Europe. So do more of that. And what is holding us back today? We really need to create a step change in the regulatory, and when I say regulatory, I mean it in the broadest sense, including permitting, planning permissions, etc.
Let me ask you about 2 other stakeholder groups you engage with. Active managers, public equity managers, BlackRock's among them. What have you learned as CEO about that community and what you as a CEO need to do to work with them?
I think firstly to truly listen. In my limited experience working directly with shareholders, I've gotten a lot of good advice, counsel, and the rest. And every piece of input is valuable. I haven't found people talking to us to try to destroy the value of the company, but they are bringing very different vantage points. Sometimes we differ on tactics, sometimes we actually differ on endpoints, but by and large, they're bringing a certain perspective. And I find as much value, if not more value, in engaging with my investor community as I suspect they do with me. Rather than this is a chore, I go out on a learning expedition because the lenses they see and the comparators that they have talking to multiple CEOs, both in my sector and beyond, give me nuggets that allow me to go back and reflect further. I think at the same time, what I've learned is that trust takes time to build, and talking a good game is not good enough. At the end of the day, the premium, or potentially a discount if you're not delivering, is built on track record. And consistency has a massive premium. And so that earning that trust and protecting that trust, I think, is critical for the shareholders, but critical for the management team of the company.
So you've been in the job 2 years. If you were to sit down with your 2 years younger self and say, well, Junior, here's what you need to know, what would you say?
Your instincts typically are a good gauge for where to go, a good compass. Don't overstudy it. The bias for action is okay. Lean in, and organizations are resilient. Make the changes that need to be made. Do it with conviction, and things will work out. On an improvement point, though, I would say, yes, engage, in particular with the organization when you're going through tremendous change. But importantly, learn to engage not just with the conclusions of where you've gotten to, engage more on the dilemmas that you grappled with and why you got to the conclusions you got to. Take the organization with you on the journey that you have gone through, and don't just give them the outcome. They deserve to really understand the totality of the thinking, and that will take people along.
Last question. One day, you will hand over the firm to your successor. What do you hope are the key accomplishments that you will leave to him or her?
In companies like ours, the biggest legacy I think you leave is the capability in the organization, the culture, the dynamic. Right? I'm assuming I've left a decent balance sheet, a good share price, a decent portfolio. But it's the software that's going to count. My advice to that successor is going to be, my friend, every single time is going to come with its challenges, with its uncertainty, with its volatility, with its unprecedented nature of challenges and risks. What you can do is to have an organism, a culture of an organization that can respond. And hopefully what you can do is focus on what you can control. You can get caught up in all the narrative, but if you are a data-centric organization like we have traditionally been, and you focus on what you can control, that gives you the best bet of being able to weather the multiple storms that inevitably will come, and on a life cycle basis, to be able to create something special. So I hope I can leave that culture. I hope I can leave a cadre of professionals who are able to take it way beyond what this generation of leaders will do, and to be able to indeed chart out the next 117 years for this company.
Well, thank you for joining us on BizShift.
Thank you for having me, Mark.